Hello, good afternoon, everyone. So welcome to day 43 of 60-day rule-based trading challenge. And today was, we exited the trade pretty early because our stop loss got hit in the early in the morning. So not much to talk about the trade details. But however, the learnings are, from a learning perspective, it's worth going through the details. So we entered the trade at 9:30, and the indication was a bullish trade, and obviously because of that, 24,800 put was sold right at 9:30, as you see here, and it got hit it stop loss got triggered at 10:35. Within about a little over an hour later, the stop loss got hit, and then we got the exit. The reasons behind this move is interesting to watch, and obviously you are seeing a couple of more entries that is not pertaining to this trade. And as you see here, we made a profit in this trade. I'm not considering that because we are sticking to the one single strategy for this 60-day trading challenge. Here, the same instrument we sold at 146.60 at after an hour or so, and then at the day end we covered it at 110.75, which means we made a profit here. But that's not about the P&L, and also I'm not even considering, although we made a profit here, I don't want to mix these two strategies. But since it is appearing here, I'm just mentioned about it. These two are the valid trades for this strategy. And as you see here on the chart, at 9:30, we sold the 24,800 put, which is at 101.30. And then we had, entry stop loss was 152 rupees. We had placed the order at 152 rupees. And then since the trigger price is 151.90, it got 10 paise before the max stop loss. It got exited at 10:35. So what happened over here, it will be interesting to see behind this. So this is the Nifty 50 chart on the right side of this screen. What you are seeing, this is the candle at which we entered. And as you see, after our entry, the market appeared it started with a gap up, and then there was a first candle was a big candle, and then that is how we got the confirmation in the 9:25 to 9:30 candle itself, the bullish trade, and then we entered into the bullish trade. And then post our taking the entry, it was in the sidelines, and then it even went quite above the our in our direction of trade, and it remained in the direction of trade till 10 o'clock or so. And post 10 o'clock, it started consolidating. I would not say a bearish, because if you look at the whole day, it indeed closed pretty, in a positive, this thing, about 0.6% is the overall market closed above the previous day. So here it was a consolidation happened during the consolidation. Even if this consolidation, and there are three lines you see here. The first line is the upper band of the ORB, which is not relevant here. So because we had taken a bullish trade, so only if the Fed had closed below the 9:22 trade entry time, whatever is the time, the lower range we exit. Ideally, we should have exited on this calendar, this candle, one may argue, but that is not the single criteria, because this distance between the ORB is pretty low. So 25,005 and 25,056, hardly 50 points. So we cannot operate in a just 50 points range, and hence in such case we will have to consider the stop loss as the initial candle, also the 9:15 candle. So we had taken the 9:15 candle as a reference, and this I have marked it just to explain this concept here. That is why I kept this line also. So there are three lines. So today's range for us was between this line and the top line, the bottom line, which is around 24,900, and the top line is 25,056, which is about 150 points. Is the we should allow market also to move a bit of in a range. So, but what happened is here, why did our stop loss hit? You will see the India VIX chart. This is the place where we entered our trade. So the opening, the level of VIX is 17.88, and this is the candle at which we exited. And if you see here, 18.4 is the high. That means this candle made there was a spike, not only already here it was a spike, and then there was a massive spike over here, and that is the reason which got triggered the stop loss. So, and it is it's not about losing the trade, but it is trying to understand and understand the rationale behind what went behind the scene is also important. And then why did we not take a stop and reverse? Because there are two reasons. One is it was not clearly indicating as you see here, it had not broken the range, the bottom range for us to take a stop and reverse trade. And also, it was not a place where we would have liked to take a stop and reverse trade because the VIX had already gone up. And generally, we wish to buy in the stop and reverse trade, but not necessarily that we only buy. We will also not choose to sell. But today, it was since the direction was still not confirmed against the downtrend was not confirmed, and it was still all the parameters were indicating the bullish trade itself. We did not take the stop and reverse trade. So that logic is very clear. And after that, if you see here, the it remained in the same range, or it started coming down, and that is how, as you see here, against another different strategy, 1 hour later, that is at 11:39 or 11:40. If you see here, 11:40 is this is the candle. So this is a place where we could identify to again sell the same instrument, and we were able to close that trade in a profitable manner. But I'm not definitely considering this for this strategy again, as I multiple times mentioned. So we did close the trade positive in the sense profit, but for this strategy we ended this day in the loss. So coming to the trading journal, as you see here, because of today's dip, we are obviously our ROI is dropped for the day. Like from a peak level, it is now again taken a dip. So 101.30 is the price at which we sold. And with 50% stop loss, it got exited at 151.90, and we incurred a trading cost of 63.20, and then that means we incurred a loss of about 6,858 rupees, which brought down our P&L to 15% returns. So which is in 43 days, 15% is an humongous return, but again, P&L is not the criteria which again and again I want to emphasize. It's about the process and the learnings what we get behind the each of the trade is going to be important. And as you see here, our equity curve has taken a bit dip from a peak level. It took a small dip today. So that's how the day ended for us. So that's it for the day. So see you tomorrow for the 44th day of this trading challenge, and take care. Bye bye. Have a great evening.